Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Wow. I gotta say, guys, it's been a crazy day here and within crypto in general. If you missed it, since the election was decided, the U.S. presidential election was decided in the last few hours, it has been a total risk-on environment, especially benefiting crypto. Bitcoin alone and Ethereum are up 10% in the last hour. 24 hours. Solana is up 12%. Bitcoin has reached a new all-time high. I think it's at about 76,000 now. Don't know how much further up or down it'll go. There were massive inflows to the ETFs this morning, and most of Ethereum DeFi is up anywhere from like 20 to 30%. So there's actually been very little news specific to projects in the last 24 hours, but this is a total risk on rally related to a general feeling in the market that people think that crypto regulation is going to be looser going forward based on the incoming administration. And so I guess we'll see what happens. I mean, I think it means a good future or a exciting future for crypto for the next couple months. But let's talk about some tokens and what was going on this week. So to start, we're going to talk about IMX. So Immutable X, their gaming focused layer 2 scaling solution. This past week, they announced that they received a Wells notice from the Securities and Exchange Commission. So Wells notice is actually like the pretty serious notice for a company to get in terms of when they are a pretty serious like notice for them to get from the SEC. And, they were very clear with sharing it with everyone. The notice claimed that that IMX or that Immutable violated securities laws. It didn't detail, though, what exactly the company had done. Immutable did say in their blog post announcement that they think it relates to the listing and then private sales of the IMX token back from 2021. And we were seeing the SEC more and more go after projects that previously raised using, ICO methods or private sales and going after them in that matter. This is but this Wells notice thing, this isn't new. We've talked about it a couple times before. There's been notices out to Coinbase, Uniswap, OpenSea. I'm trying to look at the list now, like Crypto.com. So this is not new. This has just been a general theme throughout the market. So the IMX token actually initially dropped as almost down to 30% on the day the news broke. But it has since recovered a bit. It's now down only 14% for the week. Folks could be thinking that, hey, in the future, maybe there is a possibility that, some of these Wells notices don't turn into anything if the administration becomes much more favorable to crypto. So we will see. Okay, next up, I'm going to talk about Curve Finance. So if you're not familiar with Curve, they're a decentralized exchange. Technically, what they do is what are called in-kind swaps. So they only swap assets that are of the same kind. So mostly stable coins, but they also will swap different versions of ETH. So if you've got wrapped ETH and you have regular ETH, you can swap it in there. Or more recently, there's liquid staking tokens. So you can have, swaps for those in-kind transactions there. About a year ago, though, Curve introduced a stablecoin product of their own called CRV USD. And it was based on a whole new system of using essentially kind of like decentralized loans for folks to own this product. Kind of similar to what you see with like products like Maker, but they have a soft liquidation mechanism, which means that users don't get violently liquidated on big moves up and down in the underlying asset. So unfortunately, though, Curve's stablecoin has really only managed to gain about a $50 million market cap, which is relatively small. And they've been pretty much directly competing with Aave, which launched their Go stablecoin a year ago as well. And so far, Aave has managed to build up that stablecoin just slightly more. What was cool, though, is that just a couple days ago, Curve did put out a proposal to divert 10% of the revenues that normally go to that are 10% of the revenues earned through the Curve stablecoin back to Curve stakers or SCRV USD. And so the idea here, though, is that this would basically create a supply sink for the stable token to help maintain its peg. Since a lot of decentralized stablecoins rely on these like very minute tools to kind of keep them close to the $1 peg. They also have to create ways to either like help when there's oversupply and you've got, the peg kind of shifts below the $1 price target, or when there's too little supply and you have above the $1 price target. So this should help with this. It's very similar. It's basically the same concept that MakerDAO uses with their SDAI savings rate, where they offer, users the ability to earn a savings amount by depositing assets into SDAI, basically the staking contract. So we'll see how this shakes out. Just as like a quick, just give you some numbers here. Curve USD currently makes about $7 million a year. And this would basically allocate about $700,000 to the S-Curve stakers going forward. I guess we will see how many there are. Curve didn't really react to this news. It is down about 2.3% for the week. All right, next up, I'm going to talk about Oneinch. So Oneinch is the decentralized exchange aggregator, which basically means you can go there if you want to just get the best pricing on anything across multiple assets. They actually suffered an exploit of their front end this past week. Basically what happened was that there is this content library called Lottie Player, which allows, basically gives like user interface type of like interactions, and places like Oneinch just use that library for their front end of their website. Somebody had put some malicious code into the Lottie Player content library, and as a result, as projects, not just Oneinch, downloaded this content library, it inserted unintentionally this malicious code into the front end of their platform. So thankfully, this was flagged super quickly. And within a few hours, the Lottie Player team was able to resolve the issue. And the Oneinch team even promised that they're going to refund users whose wallets were affected, even though this wasn't technically their fault. The Oneinch team, however, did not disclose how much was lost during the attack. With this, though, Oneinch is basically flat for the week. It's up about 40 basis points. Okay, last up, we're going to talk about Celestia. I think I talked about them a couple weeks ago here. So Celestia is a decentralized infrastructure project providing specifically data availability to other to parts of the Web3 stack. So they basically saw their first large token unlock this past week on Thursday. And the supply of TIA tokens increased from 267 million tokens to 462 million tokens, which is a 73% increase. Those unlocked tokens belong to early team members and early investors. The early investor group, which invested in 2021 and 2022, people basically presume that they're up quite a bit on this early stage investment. And so, I mean, and even if you just look at the raw numbers, like even though Celestia had an amazing run, and at one point I think it was worth like $16, and it's now down to about $5 now. You have to think about it from when the token launched, it is up it's up to just over 2x since it launched last October. So even just based on that, the early investors are up quite a bit. So like I said, while the data and then just in general, the data on token unlocks is very murky. And we're not totally sure how this really impacted it. TIA has also been in a bit of a downtrend since mid-October. I did talk about them a couple weeks ago, as there'd been some stuff around them announcing a new private sale, also announcing the launch of a new upgrade to their platform. But we'll see how it's doing. To be clear, it's still down 76% from its all-time high. This week, though, it's up 5.9% for the week. All right, that's all I got for you guys this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.